Good morning, Predicted Trades family. Hope everybody's doing well. We have come to another Friday, October 28th, last Friday of the month. Monday's last day of the month, last trading day. Let's do a quick review. Oh, come on, Toss, don't start freezing on me already. There we go. So yesterday, we opened near the top of some squeezes on a lot of things on the market. And near the daily 50, we caught a quick pop up to it. And then when we started to lose it, started calling out shorts in the room, down to squeeze bottoms. Once we got down there, started calling out longs back to squeeze top. We got that pop back up for a new high of day and to hit some squeeze tops. Then started calling out shorts again, back down to squeeze bottom. Got a little pop to VWAP, and then just drifted down into close. As we know, we got that big reaction on Amazon and Apple, and then Apple started to pop back once the numbers came out that they were pretty decent. As you can see, my key levels here kept us contained overnight. We got up to that 38.07 and then fell back near this 37.73. We do have a big 4-hour squeeze here in place that we held overnight, and that sits down at this key level of 37.73. That's why I titled today's prep, we've got to hold 37.73 or else we're heading further down. Just to give you guys a quick look at it. So on this chart, we reviewed it before, but basically I have the 45 EMA from a lot of different time frames. And this blue line is the 4-hour 45. I like to teach that crossing below the 45 on any time frame is a true change of trend. And there we go. And it sits down near that 37.73. As we zoom over here, there we go. It sits at about 37.84. We've got our 4-hour squeeze bottom at 37.73. The lowest I'd allow it to go is at 37.62 to hit the daily 21. And then pop back above 37.73. So basically, we need to hold this zone on any kind of drop. And if we can hold, then we can try to rally back from this 4-hour squeeze bottom back to fill the gap, which would have been kind of around here, and then try to press back up to that daily 50. But before I get ahead of myself and talk about where we could be going today, let's take a quick look at the economic calendar. We do have some data coming out in just a few minutes. It's Friday. So we have some employment data, some PCE data, a whole bunch of PCE data, some disposable income and consumer spending, and then at 10, we have that University of Michigan inflation data. So, we got our GDP yesterday, which came out a little better than expected. Right? Actual forecast. GDP came out a little better than expected. If PCE can come out and be favorable, and then this University of Michigan data that comes out at 10 a.m. for some inflation metrics. You know, GDP is an inflation metric, PCE, and then this University of Michigan Consumer Sentiment Index and 5-year inflation is yet another. So we've had some favorable numbers around inflation. We're about to get some more today. Let's see how they turn out. Let's see what the reaction is. And just looking forward to next week, we have some PMI on Monday, Tuesday, some jobs data, ADP report, and then FOMC is the big one on Wednesday. We got FOMC to start the month. And I believe the forecast, at least, that I've been seeing is we might see our first rate increase that's not 75 basis points potentially in November. So we could have cause to rally into FOMC. We'll have to see what we get. We have non-farm payroll as well on Friday of next week. So for today, about to get that PCE data. You know, if it starts to dump us through this stuff, we'll have to see where we land. But if we can hold up at this zone, looking for a bounce back up to fill the gap, maybe even back up to this zone around 38.43, 38.55, which we arrived to, pushed for new highs off of it, came back to it, and then yesterday it became resistance. So that's the target to get back to, and then try to push to these levels that we got to high of week. But if we start to break down, we've got our 37.73, we've got our daily 21, below that 37.41, and the daily 15 at 37.20. And that 37.08 just below that daily 15. So we've got targets to the upside, targets to the downside if we start to break down. We have been running to the top of a daily squeeze. It's slowly starting to open up, but we came from the bottom of the daily squeeze to the top. We have to see if we can hold our moving averages to keep pushing higher into that top. If we start to give out our moving averages, we might be talking about a trip back down. Maybe not necessarily to visit the bottom, but at least halfway, which, you know, gets you about this 36.68, kind of where we took off from. This 36.39, 36.68 zone is where we took off from. That's where we might be heading back to if we are going to break down. Let's move on to NQ. NQ obviously getting hit the hardest from that Amazon drop. And yesterday already took out its daily 21 and 8 and made it back to the 15. Now we are resisting the 15. Our 4-hour has already fired to the downside on NQ. That's why it's no longer visible. And it looks like potentially Ruddy and YM doesn't have a 4-hour, or it might have already fired, so I'll have to take a look at that. Today, just like ES, we're held that 37.73 and we're above it. So this 11,068 and 11,000 is kind of what I'd like to see hold on NQ today. There's an hourly squeeze just in between those two levels at about 11,030. PCE data is coming out. Let me get ES in view. There we go. Just so we can see if we start to tank or not. Zoom in just a hair. Ah, nice pop. Ooh, there we go. Nice pop. Looks like that PCE data. Favorable reaction, getting back above the rest of our moving averages. So let's see if it can hold. If it comes back, you can see on NQ here, we just held that 68 straight up to that next key level. So as long as we can hold those two key levels today, we could see a nice push back to the daily 8, daily 15 up here around 11,300. And if we can clear those, then it's a mission back to 11,500. Should we start to reject and come back and lose this zone, it's down to the next zone that we tagged in that drop. That's I love the key levels that I share with you guys every day. I mean, you can see we took off from this zone, got up to each of these key levels, then rejected, back down. That big drop on Amazon stops right at that zone, and now we're working our way back. So all these key levels I share every day, definitely try to add them to your chart. Ready. Ready, looking a lot better than in Q. Basically, this is still kind of a flag, right? And we're still holding up to Tuesday's highs, kind of where we closed, at around that 1800. So ready today, let's see if on a dip we can hold squeeze bottoms, that 1800, this daily 50 if we get down there. But then looking for it to try to continue up to that 1840, and then next stop 1850, and the next stop kind of that 1870 if ready's going to continue to be strong. We do have some stack squeezes, so we could stay in this range. We'll have to see. On to YM. There we go. So YM, definitely very strong. Almost got to yesterday's highs and the week's highs on that little pop on PCE. As long as we stay above this 32,000 and 31,800, I would like to see us hold there on any dips. You can see we just pulled back to that 32,000 and then popped on that PCE data. From where we closed, we could very easily make it up to the daily 200 today on YM. We just have to get through some squeeze tops here. Basically the 4 hour on down. Looks like the 4 hour just started to form though. So really it's more 2 hour, but if we can push up to yesterday's highs and keep trekking, it's up to that daily 200 big key target above. Should we start to lose that 800, come it back to 600 and the daily 8, which sits at just above 31,500. Apple, apple, apple. Gonna save the market. And look at that wick. Came down and slapped the daily squeeze and then right back up. And Apple right at this key zone of 144, 145. It's basically what we sold off to yesterday and held going into those earnings results. So we're basically going to be opening somewhat flat, a little bit of a gap up potentially. Premium is going to get crushed. We definitely want to watch Apple calls today. You know, the 145s, 147.5. You know, basically, if we can hold this zone at the bottom of these squeezes, we can try to fight up to these key levels that we sold off from yesterday at the top of these squeezes. And if they're very strong, it's back to 150 and 152 where the daily 50 sits. We never quite gave that daily 50 a tap. It's like this, even this little wick after hours didn't quite get there. So daily 50 up in the top of this daily squeeze is what I'd be looking for if Apple can get going today. It is a Friday. You know, there was that reaction with Amazon dropping, and then she popped right back up after hours, still, you know, in the afternoon. So as long as we can hold up here, could see a nice move. Premium's going to get crushed. So it'll be interesting. If we start to lose this zone just below the daily 15 at about that 143, we've got all these stack squeezes that just kind of range from there down to about 140. And we've got that first Keltner down around 142. At some targets, you know, if they decide to drop the market today. A and B. Made it to the daily 21 at the top of squeezes. The first time we've hit the daily 21 in quite some time. You should always expect the rejection at the first reaction. So got up near that 62, almost 63 yesterday, and then sold all the way back to 58. Now we're coming up on 58. Overall, let's see if it can hold 57 at the bottom of this 4-hour squeeze. If we get a dip there, and if we get back over this 58.73, it's a goal to get back to 60 and 62 where the daily 21 sits. You know, we made it up to the daily 21. Now we pull back to these moving averages that we got through, and they've crossed over. So they should try to provide support today, even though we're about to open underneath them. Let's see if we can hold the pre-market and overnight lows around that 57 and start to work our way back up. And really, if we lose it, you know, 56 is a big key number we've been holding for weeks. Come on, there we go. For weeks, 56, big key number, been calling it out. So we should try to work off of this and recover. Amazon. Sheesh. Closed near 110. Got down to 87.5. Now, coming back up to a key level, about to open near it. If Amazon has a dip, it might tug on the market a little. Basically looking for this 91 to hold. This 90, 97. And then if we can start to get through this 97, it's a goal to get back to 100, 101, 75. You know, 104, 106, these are all key levels. If we can see a recovery, I know that the numbers were bad yesterday. Basically, as long as Amazon doesn't just keep tanking down, we can still see upside in the market today. If it could just like go sideways or maybe even recover back up to 100, we'll have to see. But Amazon, you know, has not been down at these prices in quite some time. I don't even want to go look. Let's just move on. BA. Big drop yesterday. Reported those earnings. The reaction looked good. And I talked to... Oh, I'm sorry. I covered that in prep yesterday, how the big drop was on Wednesday, how when you get a reaction candle like this, that sets the range. And whenever we get up to test one end of the range, you want to be ready to go in the opposite direction. She had a good drop on Wednesday. Yesterday had a great pop in the morning and then came back. And now we're holding above this key level. So, this might have been all we needed to take profit on BA for it to now continue higher. And, earnings wasn't the best, but overall, she's been doing real well. And this is kind of just a pullback to the daily mean. So if we can hold those moving averages and move off this 138, get back above 140, goals to get back to 144 where the daily 50 sits. And if we could see that, it would be lending to the upside of the market. If we start to lose this 138.5, coming back to 136, and should that give out, then we're talking about getting back down to these lows around 132. Cat. Cat reported yesterday. Been talking about this all week. How it could, how I had that strong Friday. It could start a grind up higher into earnings, which if they go well, we'd shoot over 200, probably up to this 212. And what do you know? That's what we got. We are past third Keltner. Would not be shocked after the decent run that Cat's been on to see it reject this 212 and start to slowly grind back to 200 and this daily 200, which is this yellow line. And not saying that that has to happen today. I'm saying over the next week or so, it could start a slow grind back before heading higher. Coin. But on a nice move over the daily moving averages up to daily squeeze tops. Now we start the slow grind back and pretty much arriving at those daily moving averages at this key level of 69.5. So if 69.5, 70 can hold today on coin, it could set up for a nice bounce to come back and retest 72, 74, and 76 up at the top of the squeeze. If we start to give out that 69.5, probably coming back to about this 68 near these highs for a test. Google. Reported and had a miss and been grinding lower. Almost made it down to this key zone overnight and trying to hold up at this shaded region around 90. Should this start to give out, likely coming down to test those lows and test this zone at 89, 89.5. But if we can hold up here and start to work our way above 93.5, then it could be back to this zone above, which spans from 95 to 96. GS. Man, GS, so strong. Yesterday's slip, barely even affected it. I'm going to be opening near the second Keltner. We do have some squeezes in place. If we can hold 335, she could catch a bounce right back up to 340, 342, this week's highs. And that third Keltner sits up around 346.5. If we start to lose that 335 base that we've had, we could be coming back to 330 and this daily 200, daily 8, which sit down at 325. Yeah, I'm not saying we necessarily get there or here today, but if we start to, if we continue the downtrend from yesterday on the market and into next week, we could see this come back to test its moving averages before heading higher. We could also see it get up to this third Keltner and remain strong if market is pushing today. Meta. Basically, guys, I would leave this one alone. Meta's in the toilet. Nobody likes Meta right now. I mean, we should not expect a whole rush of buyers to come in here. What was it? Like, this low that we hit at 123 was like if I remember correctly, a 5-year low. And now with these lows, we're at like a 6-7-year low. And I've seen so many little news articles that this whole meta transition has cost the stock this year something like 800 billion, or I've seen some silly, crazy numbers. So this one is in the toilet. Let's just leave it for now. If it breaks back over this third Keltner to the downside, maybe we'll start talking about it. Microsoft. So Microsoft drifted from this key level 332, slowly drifted down near this 225, with the reaction that we saw on Amazon and everything that kind of drug the market. Got right down to this key 220 and a half to 22 and a half. So as long as we can hold this 222 on the half, if we have a little dip on the market, we can work our way back up through this 225 with the goal of getting back to 230, 232. Basically just trying to recover today, if we're going to see upside in the market. But if we see a slip in the market, then it's 222 and a half, 220 and a half, 220, which is at the bottom of this daily squeeze. Netflix. I've been very strong after earnings. And we've come to a Friday, and we're opening right around that 300. Where are you? Right about here. Basically, as long as we can hold 295 at the bottom of these squeezes, and at yesterday's low, overnight low, we can hold 295, we can work our way back through 300 with the goal of getting right back up to this week's high and this zone around 306 and a half, 307. Should we start to give out 295, then it's a slip back to 290 at the bottom of this 4-hour squeeze and this Keltner. NVIDIA. So NVIDIA have been making good pushes up and then gapping down, and good pushes up and falling back. We got that gap up yesterday right at the top of a bunch of squeezes and at the daily 50. So we should always expect a pullback from that. But if you look, we are holding up above all of these low wicks, right? Right at about 128. So if we have a little dip, looking for 128 to hold, if that gives out, coming back to 125, right near the daily 21, daily 8. But if we can hold, looking for NVIDIA to truck back up to 133 and a half, 135, 136, up at the top of these squeezes, and the daily 50 again. QQQ. So you can see this wick yesterday on QQQ got right down near last Friday's lows. And now we're going to be opening right near that little bounce point from last Friday at about 268 and a half. So if that can hold at the bottom of these squeezes, and if Apple, Microsoft, a lot of the thesis that I just covered can keep going, or can give us a push to the upside. Looking for QQQ to get back above 270, 272, basically fill in the gap, right? And if it could keep going up to 274, and if the market's just really ripping 275 back to the daily 21. But if we start to slip and lose that 268, coming back to 266 to these lows, and any further, 260 would be a big downside target near the daily squeeze. That's if the whole market's dropping, and not even necessarily saying we get there today. But if we slip into the end of the month, this would be kind of the target. SPX, going to be dealing with a sizable gap down. ES right now near 3,800. That will put this around 3,790. So, if we do have a little, if we have a little dip in the market, looking for the daily 8 to try to hold us and bounce us on SPX. If we give that out, we will come down to test Monday's low, which is near the daily 21 at 37.50. But if we can hold up at that 37.73, 37.80, catch a bounce, looking to come back and fill the gap back to this 38.15. And if we can push past that, back to the daily 50. SPY. Excuse me. On SPY, if we have a little dip, looking for, at the worst, this 374 to hold. That's right where that drop from Amazon stopped. So if we do have a dip, definitely want that low to hold at 374 where the daily 21 sits. We also have the daily 8 sitting around 376 at the bottom of these squeezes, at the top of these squeeze bottoms, I should say. So 376, 374, looking for that zone to hold on any dips. And if we can, then it's a to move to the upside, looking to get back to 380, 381.5, 382, and then the daily 50, right? And should we have just a big old ripping Friday, right? Back to the 388. We never quite got there this week. Should we have a big down day? This 374 give out, back to 370. Tesla. Been the strongest name this week, pretty much. Came off that 200 all the way up to 230. Back above the daily 8 and 15, and now we settle. Opening near this 223, if we do have a dip, looking for that daily 8, daily 15 to hold in these squeeze bottoms. Push us back through this 223, we might just open right here, right? And try to take off back to this zone, 230.5, 233, 33. You can see that each of my key levels on Monday, we got up to that 210, pushed off of 210 through 216, 223, pulled back to 216, pushed through 223, up to 230, and finally to that 233. So we've got our little pullback profit taking that happened yesterday. If we can hold up here at 223, if we have a little dip around this 220, we can try to make our way back to that zone above and to that daily 21 for another test. And finally, we'll go with UVXY and VIX, some internal gauges. For upside today, Looking for UVXY to stay below yesterday's lows, yesterday's highs around 10.7, and work its way down to 10. 10 is a big key level on UVXY, and on this path down from 13, 12, looking to get back to 10 if we're going to see some more upside today. But if we're going to see some downside in the market, we'll see UVXY hold up to yesterday's lows, come back to test these overnight highs, and test 11 where that daily 50 kind of sits. On VIX, VIX already near yesterday's lows. But VIX, it hadn't been the best gauge. We, had a mixed morning, but then it was down most of the day. And look, VIX just trended down most of the day, settling at that 27. So, if we're going to have some downside on the market today, VIX pretty much set in a floor yesterday at that 27. We'll likely see it hold that 27, work its way back up to 27.5, 28, where the daily 50 sits, if we're going to see some downside. But if we can see some more upside in the market, VIX, looking to see it stay below that 27.5, come down below 27, get back to this 26.5 where the daily 200 sits, and then below that back to 26 where that second Keltner to the downside sits. And if we were to potentially rally into FOMC, looking for VIX to get back to 25. So that's it today for prep. Thank you for tuning in. If you're new to Predicted Trades, definitely come check us out. You can join our Discord server for free. There's a link in the description of this video. And there's also a link on our website. We offer a unique service where we're on the mic all day, every day, calling out what the market is doing. And we also provide a unique system that you can't find anywhere else. I'll load it up real quick here. But basically, we provide key levels. We provide an indicator every day, which gives you key levels on your equity, but also on your options charts. We're one of the only services, if not the only service, that provides actionable levels on your options charts. Still waiting for this to load to give us our levels on ES. There we go. So basically, every day on your equity charts and on your options charts, we provide a handy-dandy roadmap. Basically, this white line is the open, so that's the overnight open on ES around this 37.98. And below that, we have a little buy zone. Above that, a little sell zone. This is usually your opening range that you deal with. And if we break out of that opening range to the upside, we have a midpoint and a destination zone to get to. We can see our daily 50 sits up in that destination zone. And if we break out of our opening range to the downside, we have a midpoint and a destination zone. And lots of times, those destinations align well with our key levels that I cover in prep. We can see if we break down today, 37.41, basically the target. If we can break up today, 38.55, the target. So, if you're new to Predicted Trades, please come check us out. I think you'll enjoy it. We're on the mic all day, every day. Lots of folks say just our live room is amazing, not to mention the entire system that we provide. So, thanks for tuning in. Good luck today, folks, and we'll see you in the chat. It is another free day, so you can come in and test out our tools on your options charts today for free. we'll see you in the chat. And again, good luck today.